Hey again, this is Danny Ihara from the Ihara team. Today we're going to share about what do we look for in an investment property under $400,000. Well, in our market, you're looking at, if you were to separate the island on Oahu into say two different segments, you'll take West Oahu and you'll take East Oahu. And if you look at West Oahu defined as using Aiea Salt Lake as a borderline, everything west of that would be West Oahu, everything east of that would be East Oahu. Well, if you're going out west, the good news about going out west is you'll get the larger spaces, right? You might be able to get a condo or a townhouse, right? Because the prices are a little lower there, and so will the rental income also be a little lower. If you go in town, you have pretty much all condos. You're not going to get townhouses under $400,000 in town. Well, the good news about being in town or East Oahu, you have a greater chance of that growth of value over time. We call capital appreciation. That's a very higher likelihood in town because demand's higher and high density, and everybody's going to have traffic challenges, and your businesses are in town, your schools are in town, work is in town, pretty much everything is in town. So that's why the demand is so high, and it will continue to stay high, which will help you with future appreciation. It also help you with monthly rental income. Okay, so location will matter. The next thing we look at is, well, what is the cost of holding the asset? So if we were to look at a rental income of $1,500, let's say, well, you have that income coming in, but there's expenses of holding the asset. Those will come in, the largest form will come in maintenance fees or HOA fees, homeowners association fees. Those can run you from $250 to $1,200. Just depends on which property you buy. There's a handful of them that we know of that we've helped many of our investors buy in. We select those mainly because of the low cost of holding, which will then equate to a larger net profit at the end of the month, right? A larger cash flow. So one is the association fees or HOA fees, maintenance fees, those types of things. Property taxes are standard. That's $350 per 100,000. So it's very low. When you look at a $400,000 property, it's about $1,400 a year. So very low cost of holding in regard to property taxes are concerned. And property taxes are only relative to the assessed value, so not to condition. Okay, so then what are the other costs you have? You have insurance, you have a property manager. Those are fairly low cost, so most of those are pretty low. The biggest one's going to be the maintenance fees. The other thing we look at in condominiums is when we look at the condominium documents, we want to make sure we read those well, because that's going to tell you if there's any maintenance fee increases scheduled over time, there's any assessments levied on the property. All these things are going to matter when you're buying an investment property. And so we've got lots of research done on these, and we can definitely guide you through that process. So if you're thinking of investing, you're thinking that maybe you've got some extra money, or you pulled stuff out of the stock market, or you've inherited some money and you want to build wealth, real estate's a great place to do it. We can help you with that. It's very safe and secure, and not as volatile as most other investments. Over the last 30 or so years, we looked at about 4.6% return. So it's a very steady, healthy environment. Not only do you get a good cash flow, but also you have long-term appreciation. So if you're looking for something that puts your money in so you make a few dollars here to support your lifestyle and wanting to plan for your future, real estate's a great investment. It's one of the few investments you can actually make where you only can pay it as little as 25% down on an investment and yield those returns. So if you have any questions, feel free to reach out to us. We'll be happy to help. In our future videos, we're going to talk about how do you actually crunch the numbers, right? What does that look like? Well, we've got a proprietary system that will help with that. It's called an asset performance test. And we'll walk you through deep dive into that. It's a lengthy video, and that'll come up in the future. If you're interested, let us know. We'll make sure that we let you know that when that's going to be on. We'll talk to you soon. Aloha.